welcome to the first episode of Business Chronicles for 2025. I am Pallavi Agnihotri.
I am Seeshana Saneechur, and today we have the pleasure of having Erick Misiani, a Pan-African tax expert, for an in-depth interview on taxation in Africa and the Middle East.
Followed by important tax deadlines for the month of January 2025, presented by Seeshana Saneechur.
Welcome, Erick, for our first edition of Business Chronicle for 2025.
Thank you, Sebastien and Pallavi, for having me.
It's a pleasure.
Oh.
So let's dive into our interview.
Yeah.
So Erick, the tax landscape in Africa and in the Middle East has seen significant changes in the recent years. How have these changes impacted tax administration for both taxpayers and the revenue authorities?
Thank you, Sebastien. The tax landscape has been changing over time in Africa, of course, and globally. Some of the changes some of the factors that have triggered the changes include digitalization of the economy, so that then the way businesses were being conducted before has changed over time. Now, instead of the conventional businesses, now we have seen increasingly a number of businesses conducting their businesses on the digital arena. Because of that, then the revenue authorities have to catch up. And for them to catch up, then they have to change the tax systems that they are using, the tax landscape, enacting a number of new legislations to tweak the system to address some of the changes that the digital economy has brought into practice. Another factor that has seen the tax landscape changing is because of multinationals that previously were conducting businesses maybe in a few countries, but now they are moving globally to a number of jurisdictions from their home countries. For them then to interact with their customers, they have to change their operating models. And as a result of this, then the tax landscape has to change. The other factor that has caused the tax landscape to change is the pressure by revenue authorities to collect more revenue to address some of the challenges or to enable their governments to render services to their populace. To do that, then you see a number of revenue authorities taking an aggressive approach, pursuing various taxpayers in order to collect a little bit more revenue to necessitate their government to provide services. So what we have seen globally for a number of years, we have seen that the systems are changing. The approaches businesses were using before have also evolved. As a result of that, then the tax system has to address, or rather has to evolve to address the change in business models. Yeah.
So today's focus is really about tax. Tax controversies and disputes are becoming more common in various jurisdictions as government revenue pressure intensifies. What are some of the primary triggers of these disputes in Africa and the Middle East?
So there are a number of factors that trigger or cause tax disputes and controversies in Africa and even globally. Some of the some of the reasons that trigger those disputes may include pressure by revenue authorities to collect more revenue. For them to do that, then they end up carrying more tax audits to try to nab some of the taxpayers perhaps who are not doing the right thing. The other trigger of the disputes is basically interpretation of tax legislation in a number of countries. So you find the taxpayers take a certain position, and then the revenue authorities will take another position different from the one that the taxpayers are taken. So because of that interpretation differences between the taxpayer and the revenue authorities, then you see tax disputes arising. The other aspect that has triggered this is the clamor by various bodies to try to address some of the menace created by multinationals globally trying to shift profit from high tax jurisdictions to low tax jurisdictions. You have seen bodies like G20, you have seen OECD, you have seen even UN trying to curb this aggressive tax planning undertaken by multinationals operating in different countries, trying to minimize their tax liability and probably shift tax revenue from high tax jurisdictions to low tax jurisdictions. So we have seen mushrooming of a lot of requirements. We have seen transfer pricing taking center stage in various countries. Some of the countries like UAE that never had transfer pricing requirements previously, even corporate income tax, and now they have promulgated in their tax jurisprudence corporate income tax at 9%, which took effect last year. And then now we have transfer pricing even in UAE. So because of some of these initiatives and the pressure by various bodies that are trying to circumvent this aggressive tax planning undertaken by a lot of multinationals, then we have seen even transfer pricing disputes, increasing. Case in point, the other a few months ago, you saw even here in Mauritius the AlphaGo case that ARC ruled on. A number of countries in Africa, just the other day you saw in European Union Commission pronouncing themselves on the Apple case, which is one of the biggest, I guess, tax another amount involved. All countries in Africa have seen transfer pricing disputes mushrooming and increasing. So these are some of the challenges that then trigger some of these disputes. And actually another one, perhaps may give us an example, is aggressive, even as in revenue targets by a lot of revenue authorities. You find most revenue authorities nowadays, the approach they are taking is that they have allocated a revenue target for each and every officer working for the revenue authority. So as a sort of that, some of the officers then take an aggressive approach. How do I meet my targets? For me, it's one of the areas that I don't agree with the revenue authorities, because if you give somebody a target to meet, this person is not selling anything, right? And because the first question should be, is there tax to be collected? If our taxpayers, accounted for their taxes correctly, then you are giving me a target, where am I going to collect these tax from? So those are some of the challenges we have seen in a number of countries in Africa, because there's a revenue pressure to fund government operations and for the government basically to provide services as a sort of social contract. We have seen this increasingly triggering some of these disputes. So it's incumbent upon taxpayers to ensure that their records are up to date, they do the right thing, they endeavor to have capacity internally, and even perhaps sometimes engaging consultants to engage revenue authorities when they come calling for more taxes, because this aspect of tax disputes will continue being with us here for the rest of our life.
And Erick, speaking of transfer pricing compliance, we know that this remains a complex issue for multinational companies. So what are the biggest challenges faced by companies operating in Africa and the Middle East?
So transfer pricing, as they say, is not an exact science. So sometimes you find is the perception or the position taken by one party vis-a-vis the other. So there are a number of challenges when it comes to transfer pricing. How do you prepare a document that can be reviewed by the revenue authorities and considered to meet all the requirements of like now arm's length principle? Because ideal transfer pricing ordinarily is ensuring that control transaction undertaken by various related parties are at arm's length. But then, how do you justify to the revenue authority that the price that you have considered is at arm's length? So that's one challenge that I see with the transfer pricing requirements in Africa and globally, where revenue authorities are expected to, use some transfer pricing methods to prepare the document, do benchmarking, and then for them to establish that that price will be considered at arm's length. However, in practice, we have seen that it's not possible to prepare your document, set a price that will be considered to be at arm's length. For instance, I've seen a number of cases like in Nigeria where one company used one method. In 1 year, they used TNNM. In another year, they changed, they used maybe this price method. And then when the revenue authority was reviewing the transfer pricing policy, they say, no, we believe the method you have used is not the most appropriate. You should have used cap or controlled on your cap. So because of that, then we see a lot of risks when it comes to meeting some of these requirements. Another challenge with the transfer pricing is sometimes when you want to do benchmarking study, sometimes it's not easy, like now in Africa, to get the data, the appropriate data for you to then to do your benchmarking, compare what other players in the same industry have done, for you to arrive at a price that will be deemed to be at arm's length. So these are some of the challenges that I see with the transfer pricing issues in Africa. However, when you look at it, then it's incumbent upon revenue authorities or countries or governments to entrench systems that can minimize some of these challenges we see with the transfer pricing documents, arm's length requirements. Like now, a topic or an area that I have a lot of interest in, advanced pricing agreement, because I've seen a number of countries in the western part of the world, which some of these countries, they have advanced pricing agreements. And some of these APA frameworks have managed to minimize some of these challenges we are seeing in Africa. In Africa, a few countries have got APA frameworks, Nigeria, Uganda, and just to name a few, and others, even Tanzania. But then the challenge has been that even in South Africa, I think like 1 year ago, they were considering implementing APAs. But then one of the challenges that I've seen in Africa is revenue authorities claiming that they do not have capacity, to administer APA frameworks. But then how do you entrench a system that is certain? How do you ensure that taxpayers are guaranteed that whatever prices that they set will not be challenged by the revenue authorities? It's important for revenue authorities to entrench some of these frameworks like APA and then build the capacity within the revenue authorities so that then we have a team, perhaps in the International Department of Revenue Authority, that will concentrate on APAs. Because at the end of the day, revenue authorities and the taxpayers are partners. Revenue authorities will depend on taxes arising from businesses, and the businesses, for them to ensure that they are operating optimally, and earning the correct amount or the right amount of revenue, they must have a stable environment and a conducive environment to do business. And one of the ingredients to provide a stable environment is certainty, right? And certainty with the transfer pricing is not guaranteed. You can prepare a document and then which will be challenged by the revenue authorities. We need to move away from that, find a framework which can entrench some level of certainty, minimize some of these disputes we are talking about earlier on, because with the transfer pricing, you see disputes taking inordinately long period of time before they are fully resolved. Some of the cases I've seen, Coca-Cola case in USA, took a lot of time before it was resolved. Even the case, the Apple case, it has taken quite some time before finally we got a ruling. And that one tells you that globally, we need to have a system that can be able to eliminate some of these risks we see by entrenching certainty.
So, Eric, VAT on the digital marketplaces is increasingly being entrenched by governments to shore up the tax revenue. According to you, what are the implications for companies and consumers?
So, thank you, Pallavi, for that question. If you look at VAT on the digital marketplace and even DST, it has come as a result of inability of revenue authorities sometimes to correct some of the basically revenue as a result of some of the systems employed by a number of our businesses. So if you compare the conventional business environment, a business had to set up, brick and mortar, like outlet somewhere. If you wanted to operate in a number of countries, in each country you operate, you must have an establishment, maybe a branch or maybe a subsidiary. But over time, you have seen that businesses are able to create business models that negates this aspect of a separate entity concept, so that you can be headquartered in US, maybe California, but then you are deriving revenue from all over the world, including Africa. So remember, VAT global principle is based on destination principle. However, some of these countries were not able to tax or to realize revenue or VAT revenue arising from some of these business models that have been employed by some of the multinationals. Then to cap that challenge, then VAT on the digital marketplace had to be enacted in a number of countries. I've seen so many countries in Africa which has this requirement from Nigeria, Kenya, Zambia, and other countries, even South Africa. So the question then is, how do you ensure, as the revenue authorities, first of all, you have a system that can enable you to nab some of these or bring some of these players into the tax net, so that then they are able to charge VAT when rendering services to consumers, especially because mostly VAT on the digital marketplace is on B2C, unlike B2B, which is basically within the ambit of reverse VAT in a number of countries. So first of all, revenue authorities are to come with a modality to bring into the tax net some of these players who operate in the digital arena. If you look at Netflix, if you look at Showmax, a product that is provided to a number of consumers globally, but then the provider of this service is located in one jurisdiction. If you look at players like Airbnb, right, who are assisting a number of businesses located in different countries to provide accommodation to a number of potential customers, maybe traveling from one place to another? How do you then ensure that the consumer is able to pay VAT? So that's why then revenue authorities enacted this legislation to tax some of these, rather to mandate some of these players in the digital economy to levy VAT, first of all register, levy VAT, and then account for their VAT. From a consumer perspective, of course, it's going to increase the price of this service. But then when you look at it, at the end of the day, it's a win-win situation for the revenue authority and even consumers in some of these jurisdictions. Because if there was no VAT on some of these platforms, then perhaps it could distort the market. And then to avoid this, then I think for me, it was a good move for a number of countries to enact VAT on the digital marketplace to tackle this aspect.
And finally, Erick, the challenges faced by in-house tax teams are constantly evolving. According to you, how can we overcome those challenges to deliver more value?
Sure. In-house tax resources or teams is becoming an integral part of the business because of some of these disputes, and disputes keep on coming up. I remember previously when I was working with my previous employer, like on a weekly basis, I had a new issue. In fact, some of my colleagues were telling me that I should have an office within the revenue authorities so that then when they have an issue, they just reach me. So there has been mushrooming of a lot of disputes between taxpayers and revenue authorities. And what we are seeing is that increasingly, a lot of businesses then reached a point and realized that for us to, manage this risk, we must have an in-house person to address some of these issues raised by the revenue authorities, respond, meet the revenue authorities, and even explain. So that's why you have seen a number of companies now having tax experts in-house, unlike before where they were outsourcing, because also outsourcing is a bit costly to the businesses. So on one hand, each business needs to take care of its tax compliance. To do that, you need to have a strong team. So you need to entrench a system that can enable you to have a strong team to tackle some of these challenges. First of all, advice, because for me, I normally say that for you to be compliant, or rather minimize some of these tax risks, first of all, you need to get the best advice and the most appropriate advice. For you to get, sometimes I see businesses going outside to figures, rather outsourcing this service. But then sometimes it may not address your challenge or your issue, because you find the person the outsourced person or team may not understand the business well. So that's why then it becomes better to have an in-house person who understands the business, the nature of the business, how it works, to give you the right advice. Then, if you follow the right advice, then you find that you minimize some of these risks that might crystallize if you didn't have an in-house tax resource. So that's what we have seen increasingly globally, in-house tax team becoming more integral to the business. Of course, previously people used to think that the finance team or the accounting team can handle a tax. But then people have come to realize that tax is a unique area that it requires somebody who is a specialist in this area, taking a lot of time to research, to build their capacity, knowledge, and everything. So for me, I would say that in-house tax team is quite crucial because I've worked both in consulting firms and in-house. So what I would tell you to ensure that the advice I can give to anybody who's considering taking an in-house tax role is that one, you must enjoy reading, right? I always tell people that for you to work in a tax field, first of all, you must enjoy reading. You must be able to read some of these capacious documents, like now a Fargo case. It was more than 500 pages. You have to read all these. You have to know something has happened. There's a ruling in, like now the Apple case. You have to get that ruling. Go through it, see the arguments, and then be able to understand even the philosophy of the judicial team or the judiciary, who also sometimes are involved in settling some of these disputes. The other one, you have to understand, you must have business acumen, right? You must ask yourself, why did the business take this position, right? Because when you are having these disputes with the revenue authorities, if you do not have business acumen, you will not be able to argue your case for the benefit of your employer or the business. So that's number two characteristics that I normally tell people that for you to be a good in-house tax expert, one, enjoy reading, two, business acumen, three, you must understand accounting and also the law or legal, because most tax disputes, are or rather resolved within accounting and legal. Accounting in terms of what did the business do in terms of booking maybe a transaction in the system. Two, legal. What does the law say, right? So you have to understand accounting. Normally, from an accounting perspective, this is how it's treated. But from a tax perspective, what does the law provide? Then you have to understand. For you to advise the business that, yes, I understand from accounting perspective, do it this way, but then for us to ensure that we do not create challenges or disputes with the revenue authorities, then address it this way from a tax perspective. So that's why then accounting and law becomes quite integral or important for an in-house tax expert. So to your question, how do you provide value? You provide value to your business by understanding all these aspects. And then once you understand this aspect, then one, you are able to advise the business the correct way to treat a certain transaction or item to minimize some of these tax risks. Two, to thwart the revenue authorities from correcting unjustified taxes from the taxpayer, because earlier on I mentioned that a number of revenue authority officers have got targets, and then for you to meet the target, you have to raise a couple of assessments here and there, even in some instances where there's no justification. So if you do not have an in-house tax expert who understands what the law provides and who should be able to fight and thwart or reparse the revenue authority from correcting more, then the business will end up paying unjustified taxes to the revenue authorities, and then at the end of the day, reducing the overall value of the business. So that's the way then in-house tax experts will provide value to their businesses that they work with.
So thank you, Erick, for this insightful conversation. It was a pleasure to have you on the platform of Business Chronicles.
Thank you, Pallavi and Sebastien, for having me.
Thank you.
Thank you so much.
Welcome to Business Chronicles. Let's dive into the important filing deadlines for the upcoming month. Mark your calendar for Wednesday, 15th of January 2025, which is the deadline for submission of return for companies having an accounting year ending 30th of June 2024 with no tax payable or are in a tax loss position. The second important date will be Friday, 31st of January 2025. electronic submission of return and payment of tax by companies with accounting year ending in July 2024. Electronic submission of joint PAYE and social contribution NSF return and payment of tax withheld for December 2024. Electronic submission of PRGF return and payment of PRGF contributions for December 2024. Electronic submission of VAT return for December 2024 and payment of tax, if any. Electronic submission of monthly return of TDS and payment of tax deducted for December 2024. That wraps up our segment for important tax deadlines for this month. Stay connected with Business Chronicles for more essential insights into navigating the complex world of taxation. Until then, stay informed and stay compliant.
That's all for today's episode of Business Chronicles. See you in the next one.